Talk about the work being cut out for us here in this video, ladies and gentlemen. Here are the topics we are going to cover. First and foremost, the Fed. What today's Fed meeting means for markets going ahead. It creates a very important dynamic, which is the incoming economic data. And I want to explain that because the markets were upset today, to say the least. A lot of risk on areas of this market sold off after the Fed. Everything kind of sold off after the Fed, but especially like smaller cap names because of this one word, uncertainty. And again, we'll break all of this down in this video. We will go over any of your Tesla stock news coming out here in after hours. I do want to acknowledge the recovery that Tesla's seen. I've talked about this since earnings, specifically yesterday. I said if the Fed was bad, if earnings are bad, if the markets are generally bad into the end of this week, we could see Tesla fall into the low 300s. I specifically referenced the $308 to $310 zone. Tesla bounced at $311.62 and seen quite an impressive recovery into the end of the day. And I think that does need to be highlighted in this video. And lastly, Donald Trump, well, new trade deals are coming out here in after hours, this time with South Korea. And last but not least, we do have economic data coming out tomorrow as well. So when I tell you the work is cut out for us here in this video, I hope you're ready for a jam-packed one. Hit that like button and subscribe to the channel if you have not done so already. If you have also not checked out the link down below in the description of this video for the trading community, check that out. Now, what we are doing over there is going out, finding small cap AI winners before Wall Street picks up on them. There is a couple of stocks in particular that we are just so excited about. Literally, it could be 20, 30, 40, 50x opportunities that it's shocking Wall Street hasn't picked up on what we have. And I have, again, a history of doing this. Even the last 12 months, there's been a lot of undiscovered stocks that are now discovered. Think Nebius or Novartis Semiconductor, IONQ. I mean, the list really goes on and on. We were invested in all of those first, before they had the big rallies. And people ask me all the time, like, do I still like those companies? Sure, but I like them a lot more when they were 5 times cheaper, right? So we're getting in at the ground floor level. Hit that link down below in the description of this video. Come try it out. See if it's for you. With that said, on to tonight's episode. Okay, so to start off this video, I want to go over what happened today with the Fed. Now, the Fed, you could nitpick different headlines from Jerome Powell, some of which sounded really good, some of which sounded not so good. The bottom line is, I didn't really get much of a change out of Powell, okay? I think it was a lot of the same old that we have heard. Jerome Powell's kind of trying to go back to this whole data-dependent approach when they haven't been data-dependent. So I think that's kind of ironic, not totally unexpected. But Wall Street today was hoping for a little bit of clarity that September 17th we were going to get a cut. But there is 7 weeks until September 17th. We are going to get 2 jobs reports, 2 inflation reports, 2 of basically everything between now and September 17th. And the Fed doesn't want to commit to cutting rates September 17th. I mean, basically what I got out of the meeting is if things are good, if inflation's not a problem, even if the economy's kind of doing the same as it is today, the Fed will be in a position to cut rates in September. But if we start to see spikes in inflation, economies continuing to do well, we're not going to get a cut in September. So I think it's kind of like nothing changed, but we didn't get that certainty that markets were hoping for. Now, pricing for a September cut actually collapsed today following the Fed. So heading into the Fed meeting, there was a 63.4% chance of a cut September 17th. Now there's only a 40.4% chance of a cut. The odds of a pause jumped from 34.6% to 59.6%. Okay, and the odds of 2 cuts by September 17th completely is gone. It was at about 2.1% before today's Fed meeting. So you are no longer pricing in a cut September 17th. This, a little bit of good news, I want to say a little bit of bad news as well. But the good news really is we don't need cuts for this market to do well. Okay. Earnings are coming in really good. We had Meta, Microsoft, Applied Digital, one of the early AI stocks in the data center field that I made a killing on, okay? Among many others, like Robinhood today, that all were trading at like all-time highs and then beat on earnings and went up even more. This is a very strong market. Now, I say it's also good that we're no longer pricing in a cut, because if we start to get lower inflation readings, like we will over the next 2 days, I'm hopeful, you could see the odds of a cut for September go back up again, which could be another positive catalyst for this market. So, as I've mentioned on this channel quite often, I like to remind people periodically, for a bull market to continue to be a bull market, you really need to see stocks continue to climb a wall of worry. To get bad news every now and again is actually part of the bull market process. You have to get some bad news or bull markets just inevitably die out. So basically what I'm saying is, if the PCE report comes out good, jobs report comes in line with expectations, there's probably room to start pricing in a rate cut September 17th. Now, again, there's a lot of data between now and then. So as long as that trend kind of continues of lower inflation, okay economy, you know, maybe data can come in a little bit on the weaker side, but not like recessionary, that you will start to conquer the wall of worry that is now, hey, we're not going to get a rate cut in September. Okay. The only way this gets worse is if inflation comes in hot and the economy, you know, comes in okay or gets worse, right? If inflation comes in hot and the economy does well, jobs do well, I think that's a positive trade-off still. Like, we can do without rate cuts and this market can do well. We've seen that for a long time. But there is a risk that inflation reports come in hot, and that's something I have to acknowledge, even though I don't think that is going to be the case. Now, again, I just want to point out today and after hours, you had good earnings from ARM, Applied Digital, Robinhood, Microsoft, Meta. Like, basically everyone did really well today in after hours. And that's part of the move that is sending futures up right now on the S&P positive 0.73%, NASDAQ futures up 1.05%, and the Dow even up 0.25%. It looks like small caps are down a little bit, down 0.53%, down 1%. Not super surprising. A lot of small caps don't report earnings for still another 2 weeks or so, and cuts coming sooner perhaps could be seen as or viewed as bad for small cap companies. That could be partially why Tesla is, again, did recover a lot today from the low of the day when Tesla was down close to 3% during the Fed conference, but it's not exactly ripping higher in after hours like some other stocks are. Now, coming tomorrow morning, we will get challenger job cuts for July. This is planned layoffs, okay? So you're looking at 71,000 as the estimate. Last month for July, you came in at 48,000. So you are expecting that number to go up a bit, something we will be watching for. You do get core PC price index month over month as well tomorrow, expecting 0.3%. Now, given the way the Fed, specifically Jerome Powell, was today on the podium, kind of, again, would not give any clues towards a September rate cut. Perhaps the PCE report tomorrow is going to come in a little bit on the hotter side. The expectation, again, is 0.3%. Last month was 0.2%. The Fed gets these reports ahead of time. So the Fed already knows today what the PCE report is going to be tomorrow, all of the other data throughout the rest of this week. Jerome Powell already knows what the non-farm payrolls report and the unemployment rate is going to be on Friday, right? Because that's the big data on Friday. And the markets, surprisingly, are actually pricing in a bigger move for non-farm payrolls and the unemployment rate than they were for the Fed meeting. So like just to show you, the volatility is not over with for this week. We'll circle back to that in just a moment. Personal income month over month comes out tomorrow as well, expecting 0.2 to 0.3%. Last month was negative 0.4%, and personal spending month over month is expected at positive 0.4%. Again, the argument with tariff inflation is one of which goods prices go up. Okay, companies raise prices. Employees go to their employers and they ask for wage increases. You know, employees get paid more, they pay higher prices. In turn, companies raise prices again, employees demand higher wages. The only way you get inflation from tariffs is if you get a wage price spiral, which logically is not going to happen, nor is really possible. Okay, we've never seen a wage price spiral because of tariffs. Okay, now if we start sending out stimulus checks and Doge checks and things like that, then we have a bigger issue. I actually heard somebody like in real life talking about like tariff rebates that Trump was talking about, like mini stimulus checks for people. And I was like, gosh, I hope they don't do that, because if that's the case, then we really could have an inflation issue on our hands, but not because of tariffs. If anything, tariffs are just bad for economic growth. And if you understand economics, then you understand that. If you don't, then you think tariffs cause inflation. And that's what is so frustrating about this Fed is they don't really understand economics on a deep level, okay? Or how tariffs intertwine with the economy. I think more or less the Fed and whoever is in the tariffs are going to cause inflation camp think there's just so much money out there that consumers are doing so well that they're just going to pay higher prices and companies are going to give out wage increases. If you live in the real economy, you know that is not the case right now. You cannot go to your employer and demand higher wages because of tariffs. They will laugh in your face, they will fire you on the spot, or you will be next in line to get fired when they don't need you anymore. Okay, that's the facts. In that economy, you don't see inflation. That's the fact of the matter. Initial jobless claims will come out tomorrow as well, expecting 224,000. That's another part of the labor market story, so definitely want to watch that. Chicago PMIs for July will be coming out as well, expecting those at 42. Last month was 40.4, so a little bit better data expected for that. On Friday, non-farm payrolls will be coming out, expecting 110,000, judging on, again, how Powell would not really give us any clarity towards cutting rates. Like, Jerome Powell wouldn't even tell us what kind of data we would need. Like, he totally dodged the question and said, hey, we're just going to look at things at the September Fed meeting and make a decision then. Like, he wouldn't give us a definitive number or anything close to that, which is not really Powell's style to begin with, but it leads me to believe that maybe non-farms are going to come in good on Friday. If that's the case, that's actually a good thing. You always want to see the economic data come in good, no matter what it means for rate cuts, no matter what it means for anything else. A good economy means good earnings, which means higher stocks. That's the bottom line. Rate cuts can amplify that, but you always want to see good economic data. That's even like 2022. Like when people are bearish when good data comes out, that is the most asinine shit I've ever witnessed in my life. And I made a lot of money betting that the good data would be more important, okay? And we were correct on that. Good data is always good for markets, okay? The unemployment rate is expected at 4.2%. Jerome Powell said specifically today that you want to pay more attention to the unemployment rate, which is an interesting thing to say when we are expecting the unemployment rate to go from 4.1% to 4.2%. So watch to see if that comes in a little bit higher than expected. That could be some of the room the Fed might get to cut rates if the unemployment rate does go up, even if we continue to see, maybe slightly higher inflation numbers, or again, non-farm payrolls that potentially beat to the upside. Tomorrow in after hours, another big day of earnings. Apple, Amazon, MicroStrategy, Coinbase, Reddit, Riot, Cloudflare, Roku, and some others. tomorrow morning, CVS Health, Roblox, AbbVie, Norwegian Cruise Line, Cigna, MasterCard, Bristol Myers, and others. And then Friday pre-market, ExxonMobil, Chevron, Regeneron, Dominion Energy, and Colgate. So still a bunch of earnings in the next 48 hours. Now, Donald Trump says the U.S. reaches a full trade deal with South Korea, includes $100 billion of LNG purchase, liquefied natural gas, and 15% tariff agreement. Also, South Korea to invest $350 billion and open markets to the U.S. He says Seoul, which is their capital, will accept U.S. products, including cars, and the South Korean president to visit the U.S. within 2 weeks. Trump says this deal with South Korea will give U.S. $350 billion for investments owned and controlled by the U.S. Hassett said today, anticipate negotiations to persist after the tariff deadline. He says that he anticipates more trade agreements to arrive. Hassett says that Trump to determine the next trade deals that are forthcoming. Hassett reiterates he respects the Fed's independence, and he expects the Fed will recognize it is safe to cut rates soon. Canada's Prime Minister Carney says trade negotiations with the U.S. are ongoing and constructive. Carney says Canada may conclude talks with the U.S. by August 1st. So that sounds like to me we could have a deal with Canada by August 1st. That potentially is one of the reasons why stocks are doing well here in overnight trading. Now, Lee sees a South Korea trade deal with the U.S. that removes export uncertainty. Lee says South Korea-U.S. trade deal to aid companies' U.S. market entry. Lee says South Korea-U.S. trade deal will help strengthen the alliance. Greer stated that South Korea was always very challenging on trade with the U.S. He also says that we obtained significant concessions from the Koreans. U.S. Commerce Secretary Lutnick says steel, aluminum, and copper are omitted. Basically, that these things are not included in the South Korea trade agreement. And Greer says we will constantly monitor compliance on trade deals. Now, again, for Tesla, Tesla had this big recovery from the lows. I think a lot of people have counted out Tesla, especially retail investors recently, as the largest investor base. And that, I think, is going to be a dramatic mistake. Typically, when expectations are this low for Tesla is when you want to be bullish, is when you want to be buying the stock, when you want to be loading up. You don't want to be loading up when everyone's super optimistic. Like, what we're doing in the trading community is the, again, exact opposite of what a lot of people do. We're going out and we're buying stocks before people know about them, or when people are bearish on them and don't understand them, okay? Same is true for Tesla right now. A lot of people don't understand what Tesla is looking to do. And again, whether the Fed cuts rates in September or October or December, like, does it matter? Not really. The core thesis right now for Tesla, from my view in the short term, is Wall Street is underappreciating Tesla's AI plans. Okay. Now, if rates were lower, then maybe Tesla would get more grace, get the benefit of the doubt here. But as of right now, Wall Street is grossly underestimating Tesla. And I think that is a terrible decision to make. And I think it's going to become more obvious over the next couple of months. There's a reason hedge funds and institutions have been buying Tesla options in the kind of numbers that they have been. Ever since earnings, Tesla's option activity has seen a decisive flip, okay? From being bearish now to extremely bullish from a hedge fund and institutional perspective. Those are the guys that tend to have a heads up. Those are the guys that tend to know things before we do, okay? And I think Tesla made it pretty clear on the conference call as well. They're targeting half the U.S. population to be able to use the robotaxi network next year. Question is, how many robotaxis are we going to have out on the road? And again, I don't think Wall Street has high hopes or high expectations, but I think we could get some surprisingly, fast scaling of that business. And I think it's a mistake to, count Tesla out in the low 300s. Like when the stock was $488 back in November, December, people would have, done anything to buy the stock in the 300s. What has really changed? Well, nothing dramatic. Anyways, it's still relatively the same setup as we had then. But just we've launched the Robotaxi network and expanded now to 2 different cities, or soon to be 2 cities, and many more on the way. Just doesn't make a whole lot of sense to me. Although, again, I don't know exactly what's going to happen over the next 2 days, but I can confidently say in the next 2 months or 2 years, the stock is going to be a lot higher than where it is today, in my view. Again, that's my view. Let me know your thoughts down below in the comment section. Hit the like button and subscribe to the channel if you have not done so already. Ladies and gentlemen, check out the link in the description of this video for the trading community. Have a great rest of your day, and I will see you in the next one.